Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders and their positions. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every time that the market tested its zone, it got rejected to the upside quite aggressively. And what we can notice at the moment is that the market is currently testing the exact same zone and has already started rejecting it to the upside. So from a monthly standpoint, what we could expect is to see more bullish price action being created away from this area, as already happened in the past. Every time the market was testing this exact same zone, there is only one occasion in which the market managed to break below that zone, but immediately the market then broke back above, confirming this push to the downside as being a fake breakout. Every other time, the market respected its zone as support, so there is definitely the possibility of seeing once again this historical support and demand act as support and demand and the market to reject it to the upside. So from a monthly standpoint, at the moment, everything seems quite bullish. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the market at the moment just created a strong impulse. What we know is that no market can just go down in a straight line. At some point, every market, even in a strong downtrend, will need some corrections in order for new sellers to enter into the market and for the market to essentially continue creating lower lows and lower highs. And that is the definition of a downtrend. So here on the weekly time frame, there is definitely the possibility after this impulse to see a correction to the upside, especially because we are testing that historical support. This is definitely possible in my opinion. Now, dropping down the daily time frame, what do we see? Now, from a daily perspective, we can see again the same thing we have seen on the weekly, a strong push to the downside with no correction yet. However, we can see just the first green candle just being printed, which could mean that the correction is now ready to start from this level. That is definitely possible. Now, before we dig deeper into the technicals here, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's look at the data precisely for the euro. Now, if we're looking at the euro, we have to keep in mind that we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been increased, going from minus 50.3k up to minus 7.4k. This means that institutions have been moving back to the bullish side for the euro, therefore to the bullish side for EURUSD, because all currencies on the spot are traded against the USD. And what we can see is that just with the last report, we have seen 100 longs getting added and 14,000 shorts getting closed, meaning that institutions have been moving aggressively back to the bullish side for the euro, therefore the EURUSD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So from a daily perspective, in a situation like this, what we know is that this area is strong support and demand from a monthly standpoint, as we have already seen. And institutions are already starting to long EURUSD inside of this historical support. And we can also measure a potential correction after this impulse, especially from a weekly perspective, by taking our Fibonacci from the high to the low of this impulse leg, which gives us a first upside target essentially at this 0.32, which currently seems to be around this area, meaning that we definitely have some room for a potential push higher. before the first retracement level is even tested from a weekly perspective. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to correct at least to the 0.32 of the Fibonacci taken on the daily time frame, and also the 0.32 of the Fibonacci taken on the weekly time frame as first potential upside targets. If the market was to reject this level, I definitely wouldn't be surprised. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.